Welcome to The Explainer. Today, we're unpacking a massive headline. KSPI rises 3.56% for a fourth straight day. Our resident data monster, Lauro, is here on the front page, looking cute but ready to help us tear through these numbers. We're looking at a fascinating collision between global macro shifts in a laser-focused AI chip rally that is literally reshaping the index as we know it. Let's get right into it. We have a ton of ground to cover for this August 13th market scorecard, so we're skipping the small talk and diving straight in. With Laurel leading the charge, we can see exactly how global tech momentum is dragging the Korean market higher in a way we just haven't seen in recent sessions. The absolute defining number today? 3.56. The KSPI index closed right at 6,813.34. In the world of large-cap indices, a 3.56% single-day jump is a tectonic shift. It caps off this dramatic four-day winning streak, but what's truly compelling here is the sheer institutional force driving this recovery from recent market lows. This isn't just a slight bounce, it's a decisive, aggressive push upward. And honestly, this momentum didn't waste any time. Right at the opening bell, we saw a massive surge in KOSPI 200 futures acting as the immediate catalyst. Since these futures track the expected value of the top 200 companies on the exchange, an early spike like that screams intense buyer confidence. It didn't slowly climb, it fired off a massive morning buy signal, locking in momentum that sustained the market through the entire trading session. So what exactly lit the fuse? First up, the macro setup. U.S. July core CPI came in exactly at market expectations, hitting 2.5% year-over-year. This was a total Goldilocks print, not too hot and not too cold. The two-year Treasury yield immediately dropped on the news. And for growth and tech stocks, that is absolute music to their ears. Lower government bond yields pushed down the discount rate, basically making corporate future earnings way more valuable today. It's a massive green light for risk. Stacked on top of that macro data, we got some massive industry signals overnight. U.S. infrastructure heavyweights CoreWeave and Supermicrocomputer both dropped huge revenue beats. Remember, these are the companies building the actual physical backbone for AI, the massive cloud computing power and the servers needed to train AI models. These beats confirmed, without a shadow of a doubt, that both AI cloud adoption and the physical build-out of AI servers are aggressively accelerating right now. Which brings us to the hardware reality driving all this global demand. The true lifeblood of these huge new data centers? High-bandwidth memory units, specifically Samsung and SK Hynix's HBM3E chips. We aren't talking about your standard legacy memory here. These are incredibly dense, highly complex units built specifically to handle AI's insane data loads. As AI compute needs explode globally, demand for these exact components isn't just growing, it's scaling exponentially. Then, just to add some more fuel to the fire, fresh institutional capital rumors hit the wire. Reports surfaced that Singapore's sovereign wealth fund, Temasek, is planning direct investments to aggressively boost its artificial intelligence allocation. They're one of the biggest, most influential state-owned funds on the planet, meaning their movements dictate major capital flows. And their reported targets? Direct capital injections into both Samsung Electronics and SK Hynix. But here's where it gets interesting. Look under the hood of this massive market surge, and you'll find a fascinating contradiction. This rally was incredibly narrow. Sure, large app stocks jumped 3.8% overall, but out of the 942 total KOSPI stocks, 533 of them actually fell in value today. It was a brutal winner-takes-all environment. The vast majority of companies were left in the dust, while a select few tech giants single-handedly dragged the index up. The financial muscle behind this top-heavy rally was almost entirely foreign, 2.12 trillion Korean won. That staggering figure represents pure foreign net buying in the KOSP today. Seeing that much overseas confidence sweep into the market in a single session usually points to global funds strategically repositioning to take advantage of recent dips. But the crazy part isn't just the sheer size of the money, it's exactly where it went. Foreign buying in just two stocks, Samsung Electronics and SK Hynix, equaled 123% of the entire market's net foreign buying. Let that sink in for a second. Foreign institutions were aggressively dumping their other Korean assets just so they could consolidate capital into these two tech giants. For international money today, the AI trade was basically the only trade that mattered. While the heavyweights dominated the broader index, we really need to pivot to a specific micro-catalyst that sent absolute shockwaves through the broader Samsung supply chain ecosystem. When you look at sprawling tech hubs like Samsung Digital City in Suwon, you realize these operations rely on thousands of highly specialized parts. Today, the market violently shifted its attention to one specific subsidiary tasked with building the critical components for the AI revolution. The spark came straight from Morgan Stanley. They issued a major shift in market perspective, stating explicitly, Morgan Stanley replaced Samsung Electronics with Samsung Electromechanics as its top Korean technology pick. They didn't just casually upgrade it. They jacked up their price target to 2.62 million won, driving the stock up a violent 12.58% in a single trading session. When a major analyst makes an explosive move like that, it completely forces institutions to realign their portfolios. So why this sudden massive upgrade? It all boils down to a tiny, unglamorous little component called an MLCC, or multi-layer ceramic capacitor. These microscopic parts are absolutely vital for stabilizing voltage and filtering out power noise in electronics. Because high-power AI servers need total electrical stability to prevent catastrophic failures, they require massive quantities of MLCCs. This suddenly puts Samsung Electromechanics squarely at the beating heart of the AI hardware supply chain. They aren't just a parts supplier anymore, they're a critical AI bottleneck. And the supply and demand mechanics playing out here are wild. Hyperscalers, think Google, Amazon, and Microsoft building these massive AI data centers, are soaking up so much MLCC supply that traditional non-AI customers are starting to panic. To make sure they aren't left empty-handed, these standard customers are actually pulling their order timelines forward just to lock in future volume. This panic ordering is rapidly tightening the global supply chain and drastically raising the probabilities for future price hikes. Which brings us to the hidden signals from today's session. Beneath the surface of this massive index jump, there's a severe, almost unprecedented divergence happening between foreign capital inflow and retail investor behavior. The headline numbers look incredibly bullish, right? But the internal mechanics show a totally fractured market where different classes of investors are taking wildly opposite bets on the future of these tech giants. Just look at this breakdown. While foreign money was pouring in, retail investors were sprinting for the exits, dumping 2.73 trillion won overall today. But the target of their selling is the real story. Over 91% of that retail sell-off was strictly focused on offloading Samsung Electronics and SK Hynix. Retail investors were happily handing over their shares directly to those eager foreign buyers, completely missing out on the concentrated surge and cashing out exactly when institutional money was doubling down. And domestic institutions were caught in a really deep divide of their own. They aggressively scooped up 311 billion won of SK Hynix and its parent company SK Square. But at the exact same time, they dumped exactly 310 billion won of Samsung Electronics. It was this precise, calculated rebalancing act playing out in real time. It's clear institutions are currently favoring the pure-play memory structure of SK Hynix over the sprawling multi-division complexity of Samsung Electronics. Stacking our final correlation here, we see a really fascinating market phenomenon. On the exact same day, Morgan Stanley crowned Samsung Electromechanics as their new top pick, praising that AI-driven MLCC demand, both retail and domestic institutional money simultaneously fled the parent company, Samsung Electronics. It highlights a massive rotation. Smart money is digging deeper into the supply chain to find the most direct beneficiaries of the AI server build-out, leaving the broader parent companies behind. So, with retail investors dumping into the rally and foreign capital completely monopolizing the AI supply chain, it begs the ultimate question. Who holds the line when the next U.S. macroeconomic data drops? If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.